Welcome to the deep dive. Today we're tackling something really pressing for a lot of people. If you're maybe paying for braces and saving for college, but also, thinking about mom or dad's future care costs, yeah, you're likely part of the sandwich generation. Your time's stretched, your money's pulled in multiple directions. So we need smart strategies. We're digging into episode 314 of About That Wallet, specifically the great advice from Fadi Habib on how this generation can actually build wealth, not just get by.
Yeah, and the first hurdle, it's fundamental really, is how most people earn money. The source material points straight to Robert Kiyosaki's idea, the cash flow quadrant. Most folks are E's quadrant, employees. You trade your time, hours for dollars, basically.
And the system feels stacked against you there.
Yeah. Exactly. The government gets its slice first through taxes, and you have almost zero ways to legally write off expenses related to earning that income. It makes getting truly wealthy, well, incredibly difficult.
Okay, so that time for money trade, it's not just inefficient, it's almost designed to keep you, running in place.
Pretty much. You're paying retail on your income, essentially. The goal, the shift we need, is moving to the I quadrant, investor.
Ah, the investor. So that's where the leverage comes in.
Precisely. Investors use other people's time, other people's money. And crucially, they unlock tax advantages. Things like depreciation, writing off legitimate business expenses. It's a different ballgame.
Which is vital if you're sandwiched. You don't have more time. You need your money working harder, using systems that leverage capital.
Right. It's about aiming for financial freedom, not just a slightly bigger paycheck each month. Which leads us nicely into a big myth we need to bust.
Let me guess. Getting rich quick in the market.
You got it. All the hype around day trading, flipping crypto. It's often sold like a lottery ticket, a quick win.
But the source material is clear. Investing isn't the casino.
Absolutely not. Those rapid trades, that's often just fear or, FOMO driving decisions. It's a fast way to lose your capital.
Okay, so if it's not gambling, what's the actual game?
It boils down to managing ROI, return on investment, versus risk. They're two sides of the same coin. You can't really have one without considering the other. The aim is controlled risk.
Controlled risk. And the source mentioned a specific number, a potential ROI, 24%. That sounds, pretty high.
It does sound high. And it's not typical passive index fund returns, let's be clear. But it is achievable with disciplined, active investing. We're talking about a sustainable rate that if you hit it, doubles your money roughly every 3 years. That's powerful compounding.
Okay, but how? How do you get that kind of return without taking massive risks, especially if you're busy?
It comes down to being discriminatory. You're not buying lottery tickets. You're buying pieces of actual businesses. You have to look under the hood. Is this company actually making money? Think Apple versus, say, BlackBerry now. Are the fundamentals solid? Retained earnings, cash flow.
So due diligence, not just chasing a hot stock tip.
Exactly. If the business isn't healthy, you're speculating. Plain and simple.
Right, that makes sense. So for the busy person, the sandwich generation member who needs a framework, the source laid out 4 pillars to get started safely.
Yeah, 4 key things. First is mindset. You have to accept investing is a skill, like learning medicine or law. It needs real study and practice. You can't just wing it.
Okay, mindset first. What's pillar 2?
Pillar 2 is absolutely critical for managing risk. Start with paper trading immediately. Use a free simulation account with, monopoly money. This lets you learn, lets you fail, lets you make all the rookie mistakes without losing a single real dollar. Only put actual capital on the line after you've proven you could be consistently profitable in the simulation.
That seems like a no-brainer. Practice before playing for real stakes. Pillar 3.
Learning and mentorship. Look, YouTube is great for information, for knowledge, but it doesn't give you feedback on your specific mistakes. You need someone, a coach or mentor, to watch what you're doing, point out your blind spots, and help you actually implement the knowledge correctly. Knowledge isn't enough. It's about correct application.
Right. That feedback loop is missing if you just watch videos. Okay. And the last pillar.
The 4th pillar kind of puts it all together. Understanding the breakdown of success. The source suggests it's maybe 10% strategy, like your buy-sell rules.
Yeah.
Then 30% is risk mitigation, position sizing, stop losses, that sort of thing.
Okay, so that's 40%. What's the rest?
The biggest chunk, 60%, is psychology. Managing your own head. Controlling the fear that makes you sell low and the greed that makes you buy high. That emotional roller coaster is what wipes most people out.
60% psychology. Wow. Okay, so wrapping this up for the listener, what's the big takeaway message?
It really comes down to action over analysis. You can research forever, analyze things to
Bit
death.
of analysis paralysis. Yeah, I know that feeling.
Exactly. Especially when you feel like you have so much responsibility, like the sandwich generation does.
Mm.
But success comes from doing. Taking action, even imperfect action, accelerates your learning way faster than just reading one more article.
Make mistakes, learn, adjust, keep going.
Precisely. And maybe a final thought to leave people with, something a bit provocative from the source material. Real successful investing. It should feel boring, slow, methodical.
Boring, not exciting.
If you're feeling an adrenaline rush when you click buy or sell, you're probably doing it wrong. That's speculation. That's the casino mindset creeping back in. Investing well is often like watching paint dry until one day you look up and wow, your account has grown significantly. It's the slow, steady wins the race.
That's a powerful reframe. Boring is good. Okay, so you've heard the framework, the insights from Fadi Habib about that wallet. The tools are there. Now it's about taking that first step, that action. We really encourage you to listen to the full episode for even more detail and examples. Share this deep dive with another friend who's maybe feeling that sandwich generation squeeze. And hey, if this helped clarify things for you, we'd love it if you'd leave us a 5-star review. Thanks for tuning in. We'll catch you on the next deep dive.